And to drill down on the commodity market now, we have joined us right here in the studio, Tame Oluwole, analyst, financial derivatives company, join us for the second time this week. Tame, great to have you. Not much has changed since the last time we spoke. It's still the volatility. We're seeing that oil market. We see Joe Biden here trying to get those prices down, but other parties don't seem to care about bringing down the prices.
I mean, it's beneficial to oil exporting countries because they are generating a lot more revenue when oil prices are higher, although Nigeria has an asterisk to its name when it comes to that. But generally, what's happening in the global oil market right now is that OPEC's oil production cut of 2 million barrels per day, it's propping up market sentiments towards keeping prices high. And, over time, since oil prices began to increase, the U.S. Government has tried to, speak to OPEC on, increasing its supply rather than cut it some more to allow prices soften. But right now, with OPEC making this decision, the U.S. has said that they're going to release an additional 50 million barrels from their strategic petroleum reserves to taper oil prices, to soften oil prices and make it cheaper, because as much as the U.S. produces oil, it also imports. And, the more you import oil, in fact, you're exposed to oil price volatilities. And we're already seeing that happen in the U.S. The U.S. oil inventories, it declined. And despite that, we're still seeing oil prices, increase. So what is happening is that with the fact that they've drawn down, so much oil from the strategic reserves, with the fact that they've drawn down from the inventories, and they're also going to release more oil, to strategic, also release more oil from their strategic reserves, we're going to definitely see that have an impact in, the oil market.
That's the arm of the U.S.
Exactly. But right now, from what we're seeing, it's like market sentiments are still, positioned towards, oil prices being high. So it's almost as though OPEC's oil production cut, the fact that demand from China is still increasing despite the fact that they still have their zero COVID policy lockdown, and other countries are still trying to benefit from the oil price increases. It's right now the net effect is that oil prices are still going to be higher despite the U.S. increasing or releasing oil from their strategic reserves. And but a significant thing that's happening with the U.S. Inventory is the fact that it declined. There's a particular it's called the distillate fuel. So, and that is diesel, and that has the distillate stock has really reduced so far this year. And what that means is that diesel prices could increase some more in the United States, and that's going to definitely fuel inflation in the coming months for the United States. And we already know what's happening in the global economy. The fact that there's talks of recession, the fact that inflation is high. The UK as well just released its inflation numbers, and inflation is at its highest level since the 1980s, 40-year high of 10.1%. And Nigeria's inflation is also reflecting all of that. So clearly, there's the trickle-down effect from higher energy prices globally to Nigeria, and it's not only based upon the fact that Nigeria is on the receiving end of these dynamics, but the fact that other global economies are also feeling the brunt of higher energy prices and higher oil prices.
And who do you think is going to win this battle? No, we know the U.S. Joe Biden, he's been pushing for lower prices in the market, but it seems hard, for Joe to actually win this battle.
I mean, I, for one, I don't see anybody winning this battle anytime soon, because the markets are definitely saying that the warning signs are everywhere for the fact that oil prices could remain high. And even if oil prices, even if oil prices soften, it might not soften towards $60 per barrel or $50 per barrel, where all importing countries would, find some cushion for what is happening in terms of, the expenses or how imports have become expensive. And a particular thing that Biden said was that as they're going to release this 15 million barrels from their strategic petroleum reserves, that they're going to keep doing this except oil prices fall towards $62 per barrel to, I think, $75 per barrel, which the markets are saying that is unlikely to happen anytime soon.
And I wonder what a fair price for a barrel actually is.
Exactly. So right now, there's really no win-win. What you have are the people on the receiving end and people like on the giving end. And on the receiving end are those that are importing oil so much, and on the giving end are those that are exporting oil. Those exporting oil are benefiting from high higher oil prices, those importing oil are definitely, having their backs pushed against the wall because oil prices are, increasing on a daily basis. And even if prices are not increasing, it's more even if prices are not increasing, even if it remains around $80 per barrel or $90 per barrel, we're still going to definitely see that impact on the economy. That's this heavy impact on the global economy and domestic economies. It will remain strong. The heavy impact of inflation, the heavy impact on the financial position of several countries, and we're going to still see this impact in terms of debt. So the impact of what is happening from the Russian-Ukraine war and the higher oil prices, it's not going to wane anytime soon. We're still going to be looking at the impact of all of this, trickle down into 2023 and even 2024, and that's what we're seeing the IMF, from their World Economic Output report, saying that global inflation is still going to remain very high. We're still going to see developing economies experience high inflation even up to 2023. Advanced economies are not left out from these dynamics. Normally you would see that advanced economies are probably going to, probably dance their way through, but this time around everybody is feeling the heat of everything. And for developing countries like Nigeria, we still had a backlog from the fact that we had not even fully recovered from the COVID-19 lockdown measures, the fact that the government was spending a lot more, trying to alleviate the economy before we now had this double whammy of, the Russian-Ukraine war and, higher oil prices and everything that is coming with it. So for developing economies, it's definitely going to be worse. And if we now bring it home to Nigeria, that our oil production right now is, taking a huge hit from oil theft, it's going to definitely be worse for us.
Yeah, and we're talking about oil theft now. For the September oil production is down about 24.73%. We know the government, they've waged war on oil theft recently. They've been discovering all those, illegal pipelines. And I'm wondering, at some point, do we see, our production output actually ramp up?
I mean, the only time we're going to see oil production ramp up is when there's a complete stop to oil theft, or at least when you see, maybe if the government does have a scapegoat. Yes, if the government does have a scapegoat where other people doing these things, they see that, oh, this is the repercussion for this thing that we're doing, and the government is not smiling about it, then we would probably see a stop to it. But if we keep saying, oh, something is going to happen, so, oh, we've discovered, we keep discovering, but when is it going to stop?
Discoveries with nobody.
Yes, if we keep discovering the illegal pipelines, and yet, money is still being made from this, it's definitely going to continue to tell on our oil production. For example, Shell did, they had the Focados force majeure, that they had to put a complete stop to oil production from that terminal point, and that's one of Nigeria's. That's one of Nigeria's biggest oil production pipelines. And for the fact that that came to a stop, we saw that it definitely did a big number on Nigeria's oil production numbers. And they've come out saying that they're going to reopen the pipeline. But this is after discovering so many illegal pipelines attached to the Focados terminal. So even though Shell has said this, we're happy that they're going to reopen. But until we see a complete stop to oil theft, Nigeria's oil production numbers are probably going to continue to drop. And unfortunately, Nigeria is more sensitive to oil production changes than oil price changes. And we've seen that happen since the beginning of the year. Despite the fact that oil prices are higher, we're still experiencing high inflation numbers. We're still experiencing huge shock from the external environment because our oil production levels are low. We're not seeing external reserves show up because forex from oil production is down, is extremely low. And the more, then there's a trickle-down effect from that. The less forex we receive, the less the capacity of the CBN to defend the naira, and that now has a trickle-down effect on importers trying to access forex, and that's why we're seeing the naira depreciate so sharply at the parallel market, because supply at the official at the INE window is still very thin to meet the demand for forex.
But let's look at LNG prices now. Well, what's happening in that with those markets?
I mean, it's the same thing with oil. LNG prices are still very volatile. But as we're approaching the winter season, we're definitely going to see LNG prices prop up, especially with the fact that demand right now is very high, and there are still sanctions on Russian gas. And the main thing happening here is the fact that EU is definitely on its toes right now, trying to source source for alternative supply of LNG to them. Russia used to be their cheapest option, and with the fact that there are sanctions now on Russia, and especially with the fact that these sanctions are going to hit the 95%, core, 95%. Crux of the sanctions by December, and that's like the peak of the winter season for EU, and not only the EU, US as well, and the UK. So with the fact that these sanctions are still pretty much going to be in place, we've not seen them take a step back on it, and they haven't yet gotten higher alternative options for energy. Well, we're definitely going to see LNG
we've
prices
seen Nigeria
increase.
try to
step up there. Yes, the EU, the EU approached Nigeria to step up its production levels and trying to increase its market share. It was a good thing. It was a welcome development, but Nigeria clearly still hasn't taken up the stance to completely improve production that would even satisfy Nigeria itself, satisfy our domestic needs, and before even thinking of exporting oil to the EU and other countries.
All right, let's look at inflation. Now, we got that UK hot inflation numbers there. It's double digit.
Yes.
We don't expect anything different at this point. The levels just keep going up.
Yeah.
But how's that impacting the markets now, even back here?
At home. So the UK is one of Nigeria's major trading partners and our main source of capital inflows. And with that happening in the UK, clearly we've seen that the government is definitely going to try to tame inflation, and they're doing that by increasing interest rates. And the fact that standard of living or cost of living, in the UK is increasing. So definitely we're going to see an impact on remittance inflows into Nigeria. If, for example, you have a family member abroad or in the UK that you typically would send forex to home, when inflation wasn't as high as it was now, cost of living was not as difficult as it was or as it is now. Now the fact that that individual will have to, try to sustain his or herself first before now thinking of sending forex home. So we're going to see remittance inflows take a hit, and also capital inflows into Nigeria. The fact that the UK is trying to prop up its own economy would definitely have some impact on Nigeria's capital.
And so much going on the political end, so we're going to drill down more on that later on on the show. Thank you so much, Dumebi Oluwole, analyst, financial derivatives company. It was great having you on the program.
Thank you so much.